end of this lockdown training, and I believe we've learned so many things. At least there are certain things we are now putting in place to ensure that when it comes to accounting with our startups, we are going to be on top. Okay, so for today's class, we are actually going to look at some checklists we need to ensure in order for us to be successful with accounting when it comes to our businesses. But then, as we already know, it's going to be part of what we've already studied. Okay, so more or less like a recap, because we're going to talk about things we've already discussed earlier on. So for today's topic, it's basically about checklist that we need to know in order to ensure successful accounting in our businesses. We all know how time-consuming and tiring accounting can be, but all the same, it's important that we have a solid plan for accounting so that our businesses can thrive. We work with money, so it's best that we are able to account for this money, and then also we're able to report on all transactions that have occurred in our business so that in the future or whichever way, it can help us with decision making in our businesses. Yes. So that's it for today. So we all know that it's quite scary sometimes to start a business, and then you have an idea for products or services that will be in the market. So you have money and then you decide to start up a business. Okay. While you are building the business and then launching it, it's important that you follow some accounting checklist to ensure that you are meeting all financial requirements. So we are going to look at these checklists that we need to know so that we can meet all our financial requirements. It is very, very important. Most of us business owners, okay, we spend our time focused on product development, how we can ensure that the product that we are bringing out is quality, how it can be sustained in the market and all that. Okay, we also focus our time on marketing. We also focus our time on our customers, how we can reach our customers, our current customers and other customers that we can also bring on board. And other tasks, okay, that have a direct impact on our cash received. While we look at these tasks, let's say the product development, marketing, customer outreach, and all that, it's important that we have a solid financial plan so that we can be successful with our business. Failing to take care of these tasks or checklists can cause our businesses to fail due to poor practices and lack of cash flow. So we want to look at a few things that we can ensure in order to have a successful business. Okay, our businesses depends on our money and how we use cash. So if we are not able to have proper records of these transactions that occur, it will go a long way to affect our businesses. Sometimes it might not really happen in the short term, but then in the long term, we can face lots of problems. So for today, we are going to look at the various checklists. And these checklists, they are things that we have already mentioned. We've already talked about these checklists already, but I'm going to go through. So if you have any questions today, you can bring it up because the session is going to be very, very brief. So as I discuss it and you feel you have maybe challenges in understanding it, kindly let me know so that we can resolve the issue. So as I always do, I'm going to share my screen with you and then we look at checklist. So we can always ensure that in our businesses, we have these checklists every time. It's very, very, very important that we look at these checklists. It's very essential. So number one, okay, we need to set smart financial goals. We need to set smart financial goals. It's important that we set smart financial goals. When I say financial goals, what do I mean? as you're starting a business, you need to have a plan. Okay, in the next 3 months, I should be able to do this. I should be able to get this amount of money. I'm putting this money into the business. So in the next 1 year, in the next 2 years, I need to achieve this. So there are so many financial goals that you can set. Okay, so when it comes to profits, how much profit you are looking at. When it comes to the kind of expenses, you need to know the kind of expenses that you are willing to spend on. It is very, very important. So you need to set financial goals that are smart. When I say smart, it means smart can be termed as specific. Okay, so you don't beat around the bush. Okay, so I'm looking at generating a revenue of this within the time frame, within this time frame. And then your goals must be measurable. You need to measure it. Okay, so maybe this, I'm putting this amount of money into this business. At the end of 2 years, I should get this amount of money. So that's a measurable goal. You can measure it. Okay, and then the A stands for achievable. You need to be able to achieve the goals. If you have goals that you can't achieve, you need to look at your business. You need to look at the industry in which you are in. Some of the industries are very, very competitive. So you need to know the kind of industry you are in and set achievable goals. If you set goals that are not achievable, it can cause problems because you realize that you are working and then your goals are not being achieved. This is because the goals that you set can't be achieved. Probably when it comes to your business, maybe you're trying to compare your business to another business, but then you've forgotten that that business has been in existence for quite a long time. Okay, so you need to take it step by step. So your goals must be achievable. Definitely, you need to get to that height or to that level where your company has expanded, it's big. Okay, but in the meantime, as a startup or as a small business, you need to set achievable goals. So when you achieve those goals, you can be able to move on to the other goals. And then also, R stands for realistic or relevant. Your goals must be realistic. As we're discussing, when it comes to, for instance, when it comes to a budget, you can't just set a budget because, okay, I'm creating a budget. No, it has to be a realistic one that you can achieve when you sit down. Okay, based on the things I do as my startup, based on the things I do in my company, okay, this is what I do. So your goals must be realistic. You must be able to achieve them. And then finally, it has to be timely or time bound. You need to attach a time to it with your goals. You can't set a goal, let's say you are setting a goal for the next 20 years. It's quite long. Okay, so you can start in bits. Okay, I'm setting these financial goals for the next 1 year. And at the end of that 1 year, you sit down and you assess yourself. I'm talking about financial goals, the kind of profits you want to make, the kind of investments you want to achieve. All those things are financial goals. Okay, the kind of revenue, the same as the profit, the kind of expenses. Sometimes as we are setting up businesses, we want to set up small other businesses aside the one that we have. So all these are financial goals. So we should be able to set smart financial goals. And the SMART stands for specific, measurable, achievable, realistic, and timely goals. All right. Secondly, we need a budget. We've already discussed what a budget means. We said it's a plan, okay, that helps us in spending our money. So before we spend our money, we need to go by a plan. We can't just get up and start spending or start buying. So there's a need for us to create plans, and these plans can be termed as what? A budget. So for you to be successful in your business, you need a budget. You can't work without a budget. It will cause lots of problems because you might incur expenses that shouldn't have been incurred, and you might make some decisions that shouldn't have been made, which can have a bad effect on your revenue. Great. Also, the third one is that there has to be a procedure for maintaining your income. Okay, so at the end of the month, when you receive your income, okay, how do you maintain your income? The first month, you got this X amount of money for income. Second month, you are getting X plus 1 amount, are you maintaining the income, or the income is fluctuating? Let's say the first month you get an income of 100 cedis, the second month an income of 20 cedis. That's a very huge difference. So what is happening? So you need to set a certain procedure that, okay, this is how I'm going to work. This is how I'm going to do my thing. So I need to get this amount of income on a monthly basis. So it's either you are going up, you shouldn't be coming down. Even if you are coming down, it shouldn't be a huge gap, okay, between the revenues. So we need to set a procedure to maintain our income, especially when we are receiving very high revenues or very high incomes. We should be able to maintain them. Sometimes there's some issues that might occur which are beyond our control, which can even affect our income. For instance, this lockdown, it's affecting quite a number of businesses. For instance, where it's required for you to be on the field. Let's say you produce goods and I suppose you have a factory or you have a warehouse. Okay, so sometimes certain issues can affect your income. That's a one-off scenario, a one-off case. But on a monthly basis or on a regular basis, can put it that way, on a regular basis, you need to set procedures for maintaining your income. Either you get more customers or you cut down on expenses, that kind of thing. So you need to analyze, okay, so this month I got this amount of income, the following month you got this. Then you now decide, okay, so what was the issue? What's the reason behind these differences in my income? Great. Then the fourth checklist that we can also ensure is that have a procedure for expenditure. Have a procedure. So all these things that I've said, it boils down to what we are doing during the budgeting. Have a procedure for expenditure. Before you spend, do you have a procedure for spending? Or because let's say you are in a workplace, you have people you work with. Do you just come and just demand, I need money to go and buy this? There has to be a procedure for making expenses. So what you can, for instance, what you can do is that maybe in a scenario, in a case where your company is your startup is quite big, in a sense that you have about 4 or 5 employees you are working with. And each of these people sometimes might need money to purchase some items to help them with their work. So how do you go about this? So before anyone comes to demand or ask for money, okay, there has to be a procedure. So probably the person sends in a request. So the person sends in a request. Then maybe your company might not be someone who receives the request. So the person can send a request to you, the business owner. Then you go over the request. Okay, I need money for A, B, C, and D. Now you analyze the expenses. Okay, are these expenses that are directly related to the things that he needs? Are they also in our budget? Can we postpone it? Can we get another thing in place of this? So that kind of thing. So you have a procedure for expenses. Doesn't mean that you should delay, because remember that you're working with time. But then if you also delay in executing certain things, it might affect your business. So even if you have a very long procedure, it should be timely so that when you're releasing funds to purchase those items, it's released on a timely basis. So in as much as we are saying that we need to have a procedure for expenditure, there has to be a procedure where we follow so that we can release money. It should be time bound. Okay, time has to be by it so that you don't waste time in acquiring essential products. Sometimes it's only you, okay, but you can start to discipline yourself. I'm the business owner. Okay, I need to buy these things. Is it really relevant? Do I need to get it? That kind of thing, that kind of procedure. So that if these checklists are in there, okay, and you are recruiting people or you're now hiring people, when they come, it's already a culture in the organization. It's already something that they do. Okay, you don't just get up. I have a friend, he works somewhere, and it's a company, they've been at staff for a long time. If someone wants money, can you imagine they just go to the administrator, I want money to do this. It shouldn't be like that. You want money. It has to follow the right procedure. You request for the money. So sometimes what we even do as my place is that we design a request form with numbers. So anytime you send a request, it's seen. We see all those things. So I will share a request form with you, how a request form is a template with you. So that when you're requesting, let's say in a company where you work with lots of people and they might be requesting some funds from you, or maybe even in the future, you've expanded your business and you are setting up procedures for your expenditure, there has to be a request, a kind of request form that your employees use, and they send it to someone, whoever is in charge, for review and then approval. If it's approved, then the items are bought and receipts are brought and they are checked to see if you actually spent everything or you spent less or you spent more. If you spent more, then the company will have to reimburse you. So all these are procedures for expenditure. Okay. Please, if you have a question, don't hesitate to let me know or draw my attention to it. All right. Also, have a growth strategy. You want to grow. You want to improve. How do I grow? How do I improve? How do I expand my business? You need to have a growth strategy. Other than that, forgive me to say, you remain at that same level in which you are. So all businesses, okay, in order to get more revenue, we are talking about the procedure of maintaining our income. As part of maintaining your income, what are some of the strategies you have put in place to ensure that you grow as a company? And remember, as you grow, as you expand, okay, you're able to get more revenue. But if you remain at that same level in which you were 2 years back, 3 years back, it can be a problem. So explore so many ways in which you think you can grow, looking at your business. All right. The sixth point is that check your cash flow on a daily basis. Cash. So basically, check your cash flow on a daily basis. The amount of cash that you have in the office, the amount of cash that you have on you at the shop. You need to check your cash flow on a daily basis. How much you spent today? Today, okay, so today we had this amount of money at the office. Let's say petty cash. You keep an amount of money with you. So, and today we spent this, okay, did we overspend? Did we spend within the limits? So you need to always check your cash flow and see how you are doing so that you have an idea on how you are using your money. Other than that, your money, your money can, I'm not saying your employees are going to steal your money, but it's important that you are in the know of everything that's happening when it comes to your cash. Yes. And then also record all transactions. Just as we've already discussed them. We know about recording our transactions. Record all transactions, document them, and file them. So as we've already said, either you do it manually. Let's say you use Excel spreadsheet. You do these documentations or these recordings manually using Excel sheets, or you use an accounting software which I introduced to you yesterday. And I believe at this point we are all trying our hands on one or two softwares. I got a feedback yesterday, and then someone had tried one. It was impressive. It's good that we try our hands on the various softwares and see the ones that we are comfortable with, and then we start using them. So it's important that you record all transactions. It's important for our reporting. It's important for our evaluations. We need to record all transactions. It's very important. Even if you're not doing it on your own, you can, probably because you are busy, you can outsource it to someone, an accountant, to help you, or you can do it on your own. Recruit a bookkeeper, someone to help you do it. If your business is quite small, you think you can handle it, no problem, then you can also handle it. But it's important that at the end of the day, someone is also reviewing all these transactions, so that you know that everything has been done the right way. Because sometimes, even though you might be doing this yourself, what if you are not making the right transactions in your software? So it's important that you seek help from a professional to help you, so that you can be on the right track. Great. We are still on the checklist for a successful business in accounting. We want to see how we can improve accounting in our business. We don't want to have problems with our accounting. We want our records to be up to date. So all these are ways in which we can ensure that we are being successful when it comes to accounting with our businesses. All right, the next point is that we need to pay our vendors on time. I'm sure some of us have the habit of postponing the money that we give to our vendors or people that we owe. It's important that we pay them on time. You know, sometimes we need to develop this kind of relationship with them. Okay, when you pay them on time frequently, it's easier if there's a point in time where you can't pay them. They can give you that adjustment to be able to pay later. But if we don't pay them on time, we take a long while before we pay them, it becomes a problem. There's something in accounting that we call as accounts payable ratio. Okay, for accounts payable ratio, it helps us to know, let's say we pick an industry, let's say we pick the food and beverages industry. In that industry, the industry has set a cap that, okay, you must pay all your vendors within 30 days, right? Good. Now, when you come to your business, because you're also found in that industry, when you come to your business, you can decide to create your accounts payable. Okay, so you calculate your accounts payable and then you ratio and you check and you compare with the industrial cap to see if you're on track. So let's say if the industry is saying that pay your vendors or your creditors within how do you call it 30 days. When you calculate yours and you are paying your vendors within, let's say, 40 days, then it means that you are not paying your vendors on time. So that is it. When I'm sending in the summary notes, I'll throw more light on it and I'll give you the calculation so that you can be able to calculate it. That is if you know for industry. There are some industries that are known, but for some industries, you can't actually tell. Probably you can search and find out the ratio that they've put on in that particular industry so that you know that as you are paying them, you are within or you're not within. Sometimes you don't even need to follow what the industry has. It can be a decision between you and then your vendor. Okay, you can come to an agreement. Okay, so between you and I, after you've supplied the goods to me, I'll pay you after 30 days. I'll pay after 20 days. That is between you and then the vendor. It's an agreement. So always ensure that you go by it. So if it's the 30-day reaches, please don't hesitate to pay them. If the 20-day reaches, don't hesitate to pay them. Because when you pay them on time, then you develop that relationship that you have with them. So that if it gets to a time where you can't even pay them because of some technical issues or issues beyond your control, they can give you an ample time to settle them. But if you don't pay your vendors on time, you end up losing your vendors. Now it affects your business. You can't even pay vendors, and also you can't even buy on credit. That is the effect. That's why it's advisable that you pay your vendors on time. Okay, so that if there's an issue, they can bear in mind with you, they can help you, they can adjust. They can also adjust at their end and help you. But if you don't pay them on time and they cut off that relationship with you, it affects you. So for you, now you can't even buy on credit and you don't even have money to also buy the goods, and it can have a toll on your business. So let's always remember to pay our vendors on time. When you pay them on time, it doesn't mean that you have money, but you're just trying to honor your words or honor the contract or agreement that you had with them. All right. Now, the next is that review all unpaid bills. So at the end of the month, or at the end, a month can even be too long. At the end of the week, you review all unpaid bills. Okay, you check out the week. These are the unpaid bills. Okay, so for these vendors, they're giving us this ample time. Then you separate them. So for these bills, they're supposed to be paid ASAP. You need to pay them ASAP. Then you pay them. But if you don't review them, because you can be forgetful, honestly, the pressure on you, okay, to ensure that your business is going on can even make you forget about these unpaid bills. And it can be unintentional, honestly. It's not that you are intentionally delaying their payment so that you won't pay them. No. It can be unintentional on your part. Okay. But they wouldn't know, they wouldn't take it from that side. For instance, you're supposed to pay your electricity bills and you haven't paid. and ECG keeps sending in, let's say yours is postpaid, they keep sending in bills. You forget to review them, you forget. But get to a time they can come in and disconnect your electricity, and it can affect your business because you're using electricity. So the more you review your unpaid bills, then it helps you to plan on how to pay these bills. So let's all remember to review our unpaid bills and then see how we can make payments to them, aside those that we have contracts with or agreements with, to pay them within a specific period of time. All right, I hope everything is going on. I hope we all understand to this point and we are taking notes on how we can ensure success in our accounts and when it comes to our businesses. All right, the next point is that check your projected cash flow. Check it, always check it. This one is connected to our budget. Cash flows can be likened to our budgets. Now let's check our budget. Okay, so periodically or monthly, check your budget. Fine, if you set a budget for 3 months, it doesn't mean that you don't review your budget till the next 3 months. No, after a month, you can say, okay, so for the first month, I targeted a revenue of 1,000 cedis. Second month, 2,000. Third month, 2,500. After the first month, okay, you can now review your projected cash flow. Okay, have I been able to achieve this? Okay, so how am I achieving? So maybe for the first month, we're able to even get more than the 1,000 cedis. That's a good trait. That's a good mark. Okay, so now you check your projected cash flow. Okay, so because in the first month, you're able to achieve more than what you have even earned now, then it gives you that kind of motivation to also move on. Okay, even if you check and it was below what you projected, it also gives you another motivation to work harder. So you're always within your projected cash flows. At least the difference between what you have projected and what you're getting shouldn't be that much, so that you know that you are on the right track. The next point is that prepare invoices so that they can be sent on time. Most times, it's important. It's not even most times. It's important that at all times we issue out invoices to our customers. Yes. So when a customer requests for an invoice, it's important that if a customer requests for an invoice, it's important that we send the invoices to them on time. Okay, so you can say, okay, so when someone comes to us and requests for an invoice, maybe yours is you generate your invoice from the software, so you need to send it to them via email. Or someone came to make inquiries to you and said, okay, so please, this is my email, kindly send me an invoice of the things I came to request for. Quickly, you go to your software, then you prepare the invoice like I did yesterday, and then we send it to them on time. But if we delay, it makes us look as though we are not serious. It's like we don't even need the money because someone has come to you, the person wants an invoice, and it's taking a long time before you get the invoice for them. It becomes some because business, sometimes some companies can render a particular kind of service that companies need. You know that big companies they take their accounting very seriously. Before money is released, there has to be an invoice that's seen that shows that, okay, so this is the amount of money you need to purchase these goods. So if you don't send your invoices on time, it can also affect their decision making. And at the end of the day, they can go in for another supplier. So it's important that we prepare our invoices. We have our invoices and then we prepare it on a timely basis. All right, ensure your business checkbooks are balanced. So what I'm trying to say is that you have a checkbook. So it being balanced, that you ensure that all transactions that have been issued from the checkbooks are in your system. Let's say you issue checks a lot. Maybe your business, you have your own checkbook that you issue. Every time, always make sure that the transactions in the checkbooks have been recorded in your system. So it makes your checkbooks balanced. It means that all transactions, all checks that you have issued, okay, they can also be found in your system. All right. Now the next thing is that keep a receivables ledger and analyze it. When I say receivables ledger, it means the money that we are yet to receive from individuals. So let's say someone came to you, requested for an invoice, you gave them the invoice and they came to purchase the goods, but then per the contract that you have with them, they haven't paid you yet. Maybe they paid they made part payment. Maybe per the contract, you receive 30%, then you receive another 20, then another 50. It depends on what you do, okay? All our businesses are different, so it depends on how you go about your business, whether you take credit or not. So sometimes you can even sell on credit, sometimes you don't even sell on credit. So let's say you even sell on credit, okay? You need to always keep a receivable ledger, have a ledger having a details of all people you have sold to. Even if they gave cash, they've paid, though their names will still be in the receivables ledger. Okay, so always keep a list of all these people so that you know that, okay, so especially with those that have not yet paid you, so you always know that, okay, these people actually owe me. Okay, and then you can analyze it. If it's too much, then you can and find ways and means of collecting your money. So as I've mentioned, I've worked in a school before. I was having my internship in the school. In the school, the thing is that the instruction is that you pay 70% before the class starts, and then you pay the remaining 30% after, I think, a month or so. It goes to a point, the receivables ledger was a lot, and you can derive this ledger. If you're using a software, you can derive your receivable ledger from the software. It was a lot. And if it's a lot, it means that those people are owing you, and it can even have an effect on your business. Because one, you've sold or you've rendered lots of service to people, okay, but you are not getting the money for it. This can really affect your business, because if, let's say, you've sold to about 50 people and only 20 of them have paid, the remaining 30 haven't paid, it can really have an effect on you, because you need the money to also cater for certain expenses. Yes, so it's important that your receivables ledger is kept, it's up to date, and you also analyze it frequently, so that those who have kept a long time in paying, you can send them notice, you can send them mails, you can check up on them, go to their offices, have a way of getting to them to pay your money. But then if you don't keep your receivable ledger, and you don't even keep track of those who owe you, you can't really sit down, and then you might not even know the effect of the money that they owe you. So for instance, they owe you a lot of money, but because you haven't really analyzed the ledger, you are taking it for granted, you are taking it lightly, you think, oh, only these people owe me, and it's not really a lot. And it can affect your business, because the money is also needed to do something else. And then also set aside some time to check your inventory. So especially for those of us who produce goods, okay, it's important that we frequently check our inventory. How many goods do we have in our warehouse? How many have we sold? How many did we have before we bought some? So that kind of thing. So your opening inventory, before the month started, I had 30 pieces of these goods. As the month is ending, I have 20 pieces. Okay, so it means that you sold just 10. So it helps you analyze your inventory, and then it helps you to know decisions to take concerning your inventory, whether to pause on receiving more inventory, whether to take more stock. So it's important that we set aside some time to always check our inventory, how we are faring. Okay, we have this number of goods, we have these goods. Okay, we don't have this, we have this, we need to buy this. How frequent are we using these goods? Sometimes we have raw materials we work with. Let's say we even prepare food, and when we sell these food to people, okay, people contract us for us to prepare food for them. Okay, so you need to check. Okay, we have these ingredients, we don't have this. Okay, the last time we bought this amount of ingredients, we were able to use it for 50 number of people, we prepared food for this number of people. Okay, so when we keep our inventory, it helps us to analyze how the business is going. These inventories, we've used this, we have this remaining, let's get this. It helps you to be on track. But if we are really not checking our inventory, we are just buying them, we are just spending, we are just using, we might not be able to make very, very good decisions when it comes to our inventory. So it's important that we always keep some time aside to check our inventory. It is very important. Okay, we are finishing very soon. So we are on the last bit of the checklist for ensuring a successful accounting in our businesses. So for those of us that have quite a number of people that we are working with, we need to process payroll and then the tax payment. So when it comes to payroll, we have certain things that comes along with it. We need to pay the SNIT of our employees. We also need to pay the taxes on their income. That is the pay as you earn, the PAYE. These are basic ones. We can start to pay tier 2. Okay, so the SNIT is the tier 1 and you have tier 2. It's an insurance package that we have for our employees. For tier 1 SNIT, everyone is entitled to, and tier 2, most businesses also try to pay tier 2 for them. And tier 3 too, there's very, very big organizations, they pay the tier 3 for level. We can decide to pay their SNIT for them and probably pay their tier 1 for them. We pay their PAY, you pay as you earn. Maybe they are 3, let's try to pay their contributions for them, because you don't know when these tax officials will just come to your office and they will ask you, okay, SNIT can come to your office. Sometimes they're roam. They can just come. And what they do is that they will not even come to the business owner. They will just go to any employee and ask, okay, does your employer pay your SNIT for you? Are you aware he's supposed to pay SNIT? Those kind of questions. Okay, so let's try to do the right thing, because that it will have a very huge effect on us. If we don't pay, we'll be asked to calculate for the month that these people have been working for us. So if you have employees, they've been working with you for a year, and you haven't paid any SNIT contributions for them and the PAYE, when the taxman or the SNIT officials come, they'll tell you to pay their SNIT contributions from that time and any penalty that's coming with. So just imagine the kind of trouble or burden you're going to face because you need to pay for them. But then if you already pay for them, it becomes simpler. So let's try and then try to even in our budget, you can add it to your budget. Okay, then it becomes easy for you. So you can pay for their various SNIT and then the various taxes that you need to pay for them, so that when these tax officials come, you are not found wanting. Because it will be very serious for them to just storm your organization or just storm your office and then ask them if they are being paid, their SNIT is being paid, and they just say no, because some of them don't even know. So when it comes to this, it depends on the kind of people you are working with, the kind of business. So if you registered it, you really need to pay for them. It's very, very important. All right. Now, correlate your profit and loss statement with your budget. What this is trying to say is that you can, because you prepared a budget for a particular period of time, because you prepared. Frederick, please, you want to talk? Okay, let's move on. All right. So when I say correlate your profit and loss statement with your budget, what I'm trying to say is that we already have our budget. We already know about our budget. Now, at the end of the 3 months or at the end of the first month, okay, even with our budget, we know our profit status, because we can all prepare profit and loss. So it's quite simple. What you need to do is that get your revenue, get the expenses that you incurred, then you subtract your expenses from your profit. Then you're getting your profits or your loss. That's basically to a layman. So you now compare. Okay, so per the budget, I estimated profit to be this. Did I get it? Per the budget, I estimated to incur these expenses. Did I incur more than, or did I incur less than? That's why I said that you can always prepare a variance report. You should always prepare a variance report when it comes to your budget. So after you prepared your budget, then I think I added it in the notes I sent to you. Then you subtract. Okay, so with your budget template, you can create another column by it, and you name it variance. Then you start. So when you have your budgeted, you have your actual, then you have your variance. So you can do is that you can get a new sheet. You don't want to complicate, or make your budget complex. So you can get a new spreadsheet, okay? Then you list the items from revenue to expenses. All the items that are in your budget, you list them. Now you come to the next column, budgeted amount. So you put there, okay, so the revenue, I budgeted 10,000, it is there. Then go to all the expenses, they are all there. Then the next column is what? Actual amount. That is the actual amount you really spent. Then you put it there. When you finish, then you do this calculation. Then the next column, that is variance, you put there your actual minus your budgeted. If your actual is more than the budgeted, it is known as what? Overspending. If your actual is less than your budgeted, it's known as what? Underspending. So when you do these things, it will help you to know whether you actually when you finish this thing, then you have an overall net income. So you go to your net income. The budgeted net income was, let's say, 1,000 cedis. Then the actual net income was maybe 2,000 cedis. That's good news because you got more than the income. So that's great news. And then when you go to your net income and realize that what you budgeted for is less than what you actually achieved, it means that you have not really achieved your budget. So there's more room for improvement. So that is it. So when I say correlation, it means that making that comparison, comparing it, and then deriving a variance report from it. So at the end of the day, you can look at which particular areas you underspend, which of the expenses you underspend, which of the expenses you overspend. And the ones that you overspend, you find out how come you overspend. And then if there's a need for you to make adjustments in your next budget, then you make adjustments to it so that you don't always overspend in your budget. All right. Then you compare your balance. This also refers to your balance sheet, the financial reports. You need to compare them. And that's why we say that it's important that we all keep records of our transactions for comparison's sake, so I can be able to evaluate ourselves. So last year we had this year we had this. Are we going forward? Are we not doing this? What are you not doing well? What are you doing? That is it. And then the next one is review your quarterly payroll report and then make payment. This is just like the first one that we stated, the processing of the payroll. So you can decide to generate payroll reports. Okay, in a month, how much am I spending on payroll? And when it comes to payroll, what you can do is that add all those nets and things to it. Okay, so that it makes it one amount. When you're going to pay, you always have enough money to pay your net contributions for your staff, and then also have enough money to pay for their income taxes. But if you treat them separately, sometimes you don't really have the money. When you have the money to pay, you don't really have the money at a particular time to make those payments. So you just add it to the wages and salaries. You add those payments to it. So when you're making payments in a month, you know that in a month I spend, let's say, 1,000 cedis on wages and salaries. And in these 1,000 cedis, it includes their SNET and then their income taxes. It makes things very simple for you. Then the same thing again, review your inventory, yes. Then you review your sales tax. So that's it. When it comes to taxes, you also need to review the taxes that you pay. You need to know. Let someone help you. Don't get confused, because sometimes you go to GRA, they can easily tell you. I had a friend, he went to GRA, they just told him, okay, you are now coming to pay your taxes and pay this. They just told him to pay this without any receipt, without any proper breakdown of what constitutes the thing he's paying. So I told him that no, he needs to ask them what and what entails the tax I'm paying. So you need to always know. You can contact a tax official, or you can let someone help you with your tax, so you know the kind of amount of taxes you are paying per the business that you do, so that you don't overpay them. And you also need to keep your records well for these tax officials. So when they come and they're saying that, okay, pay your records, pay this, you know that, okay, this is true because my records are up to date. But if you don't keep very good records, you're surprised that when they come around, they can tell us to pay some taxes that we'll even be surprised. Yes, so it's important that our records are in check. So basically, that's all for today. We just went through a few checklists for us. So let's always make sure that we have these checklists at the back of our hands. We have these checklists every time you write. You can keep them. I don't know where you can keep them, but always try to keep these checklists, because if you really take it seriously, okay, it can have a very good impact in your business. But then if you don't really take these checklists into considerations, probably for the short term, you might be able to escape. You might be able to do things, no one will see you, be able to do things, it wouldn't have an effect on you. But in the long run, when you wish your business is expanding, that's when these things will have a toll on you. So as I said, for instance, you don't have receivables ledger, you don't have an account of the people that owe you, the amount involved. So the amounts can be so huge, even if there are only 3 people owing you, the amount involved could be very huge. Okay, so if we have a sales ledger and then we review it and we analyze it, it will make our work easy. We can follow up on these how do you call these debtors, and then tell them, put pressure on them for them to also pay us. Then also, as I said, reviewing of unpaid bills is necessary. So all these things, I'll send in a summary notes. Let's always have these things, okay, in mind for a successful accounting in our business, because we also can't tell when an investor will be interested in our business. When someone wants to pump in more money into our businesses, then we need to come up with reports. And here we are, no reports, nothing. It will be very difficult to convince an investor to help you when you don't have accurate records. So let's all try to have these things in mind. Always keep them in mind. Always ensure that you are doing it. Even if you can't do all of these things, at least the basic ones like recording your transactions, having a procedure for spending, creating of your budget, evaluating your budgets too. All these things must be done on a timely basis, periodically, so that it will be very easy for us to handle our accounting with an ease rather than stressing. Because if we don't take care of our accounting very well, it can really cause a lot of trouble. So it's important that as startups, as business owners, we are able to keep very good records, so that when there's a need for us to prepare reports, there's a need for us to send in reports, it's easy. All right, so that's basically about today's lecture. Just wanted to help you know some of the checklists that are very important when it comes to accounting in your startups. Please, are there any questions? If you have any questions, kindly let me know so that I can address the questions. So please, I'm listening. We have about 9 minutes to the end of the class. So if anyone has any question or something, you can kindly let me know so that I can assist you, or you want to get back to me privately too. It's allowed. You can get back to me on that. So are there any questions? Or we are all okay? Are we all okay? Or we didn't get something right? Okay, so if we are all okay, all right, thank you. So if we are okay, then I think that we can bring the class one in. But then please, I hope you are preparing the budget. I want to see how you prepare your budget, okay? So please, with the assignments, kindly do it for me. The budget aspect, I want to see how you prepare the budget, especially those who are now new in preparing budgets. I want to see, and then if there's any assistance, I can offer those assistance. Okay, so please, let's all kindly go do the assignment and then prepare the budgets for 3 months. Okay, your company, your startup. Okay, so you know how much you spend, you know how you get your income, so you can use figures. You can use average figures. It might not be the exact thing, yes, but you can use average figures. So please, I'll be expecting the assignment, okay, at least by tomorrow. Let's all try and then prepare the budget, and let me see so that I can give my feedback on it. All right, so if there are no further questions, I would like to seek your permission to bring the class to an end. Okay, so if there are no further questions, as I always say, I'm open. You can always contact me for any details. All right, so I'll be expecting your assignments on the budgets, and then also I'll be sending in the summary notes. Okay, anything that I promised to send to, I'll try and then send them to you. All right, thank you very much for your time, and thank you for your consistency. Thank you for your commitment, and then hope to see you tomorrow. All right, have a nice day and take care. All right, bye.
Bye.